Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related item on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. An immediate countering bullish opening white Maribosa and bullish Harami, plus a bullish double on Friday after the previous session's bearish engulfing pattern. The market closed once more over the dark blue neckline, currently at 116.89, of the significant combined June to July head and shoulders top, which also has a double top formed from the head and the second shoulder, plus over the October 2021 high at 116.92. Below we have the combination of the green short medium moving average, currently 116.20, which sort of acted as a base for the move up. Underneath that we have the November 2020 low at 116.02 with the 2019 high just below at 115.70. Now looking above, well, we might have nothing much until July's high at 117.88 and June's high at 118.29, and the downtrends in between, which are currently at 117.96 and 117.99. Now recently I believe the large combined head and shoulders top and double top pattern to be the more dominant pattern here, and I'd previously laid out targets for these patterns below. The head and shoulders top primary target down in the 113.10 zone and the double top primary target down in the 114.55 zone have been achieved, but the secondary targets for both have become not only harder but now a little out of reach, so I have retired them today. However, there's another pattern building up, which I've previously mentioned, a late June to date bright red descending expanding wedge pattern, which is currently 111.80 to 117.49. I'm now watching this pattern with great interest, especially as prices approach the upper bright red trend line. Finally, as I've said now repeatedly for months and months, we are set up with 7.5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we're beyond. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now so far today, a further small attempt higher, not yet reaching the bright red upper trend line, but seemingly basing itself on the dark blue neckline and the October 2021 high right now. However, the market has turned lower, pushing down through the dark blue neckline and the October 21 high, though not by much. Cable, aka sterling against the US dollar. An immediate countering bullish Harami on Friday, if only just, after the previous session's bearish Harami. The market is still trapped within the previously highlighted congestion between 134.83 up to the September 2020 high at 135.81, and containing within it the green flatlining short medium moving average, currently 135.04. I suspect the green short medium moving average was acting as a base for over the last 2 days of last week. Now further overhead beyond 135.81, we have congestion at 136.21 and the February 2022 high at 136.43 before we reach target X at 136.78. Now target X is the primary target for the break above the recent early July to early August descending expanding wedge pattern, which currently is 128.98 to 133.88. The secondary hard to reach target X2 is up in the 137.88 area. Finally, much like euro dollar, we are set up here for this market to make that rarest of patterns, a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'd be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. So far today, well, we're still caught within that congestion between 134.83 to 135.81. US dollar against the Japanese yen. A reactionary bearish black crow on Friday after the previous session's bullish engulfing pattern. The market still seems to be capped by the Fibonacci congestion at 148.68, though the next congestion of note is a nearby slowly declining gold long moving average, currently at 149.20, with a little above the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Looking below, we have Fibonacci support, and it has recently been quite good Fibonacci support at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69, followed by what seems better support from the rising green short medium moving average, currently 146.33. Below that, we have the declining mauve medium moving average, currently 145.43. We're also now still in between the dark blue middle time below, currently at 144.74, and the dark blue upper time above, currently 155.34, of the important, large, shallow, and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here. The other is the broken bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target up at 150.5 was reached 3 weeks ago, though we still have live a secondary, much harder target X1 up at 158.85, which seems increasingly out of reach, as last weekend turned out to be a weekly key reversal down with all the activity there. Now, so far today, we're a lower open, but a move up from the open, though well within last Friday's range right now. US dollar against the CNH, the offshore Chinese yuan. A bullish engulfing pattern on Friday after the previous session's indecisive doji cross, but one that could also be seen as a butterfly doji. Despite this bullish Friday action, we still ended up with a weekly key reversal down for the week, a pattern that has been copied in other Chinese yuan pairings. Meanwhile, the top side is still capped by the congestion between 719.64 to 719.91, consisting, respectively, of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move, whilst below, the market pierced once again the support seen for the last 2 weeks from the flatlining green short medium moving average, currently at 717.85, though as usual the market ended up closing above it. Now further up we have resistance from the slowly declining mauve medium moving average, and that's currently at 721.21, and a dark blue neckline extension currently 721.72 of the late August to early November 2024 reverse head and shoulders pattern, with just above this the congestion at 722.88, which ties in with the lows from earlier this year between January to March. Looking below, we have the bright red trendline extension, currently at 715.11 for the mid-January to late April 2025 descending triangle, just ahead of further Fibonacci supports at 714.95 and 714.48. And that can be regarded actually as one congestion zone. Finally, a strategic observation once again, and one I will continue making here until it stops. Please note how the long moving average, currently 724.61, has been, despite some up and down waves, relatively flatlining for quite a while. So that if prices do stray too far away from it, then they seem to be brought back towards it, and that applies in either direction. So far today, a small dip lower, though only as far as the green short medium moving average and holding above it. US dollar against the Brazilian real. It was a hammer pattern on Friday, but also a bearish double and bearish harami pattern, if only just on the latter. This after the previous session's second bullish white soldier. We now seem to be established below the dark blue neckline extension to the June to September head and shoulders continuation pattern. That's currently at 542.72, as well as the congestion zone made up from the 50% Fibonacci line of the April 22 to December 24 move at 544.57 down to 540.16. Below, we now have a smaller congestion zone between the July 24 low at 536.76 and the August 24 low at 537.5. The congestion, there's also congestion at 532.15. Overall, we remain in between the showrunner for this market since April, in between the overhead bright red upper time, currently at 553.05, and the bright red middle time below, currently at 526.69, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. US dollar against the Mexican peso. A reactionary bearish black crow on Friday after the previous session's bullish white soldier. The cap, on a closing basis, of the declining green short medium moving average, currently at 1879.55, as well as the overhead congestion between the 50% Fibonacci of the April 24 to 25 move at 1876.94 and 1885.40, that congestion there. Meanwhile, below we have the very significant pairing of the February 20 low at 1851.71, along with the 61.8% Fibonacci of the big old April 21 to April 24 move at 1850.81. Further down we have the combination of the breached bright red upper time, currently at 1842.68, along with the breached many times early May to late July dark blue bear channel, and that's currently 1820.45 to 1843.47. Now both of these I am now considering relegating or withdrawing, as their importance, major in the past, has severely diminished. So far today, a lower open, but then a reactionary move back up to testing the overhead congestion between 1876.94 to 1885.40, and trying to push up through that green, which it seems to be doing at the moment, that green short medium moving average.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.